Hello, everybody. Welcome to the numbers game. Top five numbers every business owner must watch. I'm excited about this conversation today because this is really the type of thing that moves you from being a business owner to being a CEO. You have to be able to manage your business when it starts to expand, when you start to scale, and you're going to be able to do that by the numbers. And numbers such as these KPIs that we're going to go through are really going to be the tool that helps you to be able to do that while still not having a hand in everything, but still having an eye on everything. And it's really an awesome thing to move into. Also, I think it just kind of helps uh, to make your numbers more tangible. Sorry, I had a quick brain thing. It's tax season. Bear with me a little bit. Lots of late nights and early mornings and all the things. So, okay, so let's dive in to the masterclass today. If you are watching live, thank you. I'm so appreciative of your engagement, and hopefully, this is providing a lot of great value for you. If you're watching the replay, if you could just comment replay so I know if you're seeing this, that would be amazing as well. Still trying to work on getting engagement and activity up in our group. I know I have had it for a while, but anyways, that is not what we're here to talk about today. So let's dive in. The numbers game. Top five numbers every business owner must watch. This is a data driven approach to your business success. So, just a little bit about me if you're watching any of these videos for the first time. I'm Megan Schwan. I'm the CEO and founder of Sidekick Accounting. I'm a single mom for a four, and I've been a business owner for over a decade. I'm an accountant, tax strategist, business consultant, and author. I'm a certified profit first professional as well, and working on my certification as a Fix This Next consultant. So we're excited about that. Our goal here at Sidekick is to change the statistic that 8 out of 10 small businesses fail. Your business is important. It's important to be successful and sustainable for your family, for your communities, for your futures, whatever you want and envision for your business. We are wanting to change the statistic of failure into success for business owners. And so we do a lot of education, things like this. I teach for a lot of other organizations as well. I love it. And I am originally from Wisconsin, but I now live in Florida, and I enjoy going to the beach, crafting, reading, learning, hiking, traveling, and taking naps. So just a little bit about me. Feel free to drop me a comment to tell me a little bit about you as well. So today we are going to be talking about some key numbers. Not tracking numbers is like having no roadmap. And I know you probably, if you've been in business at all, you understand the importance of knowing what's going on, being strategic, having goals, having plans. The numbers is what helps to make those things tangible and make them trackable. And so those are what we are going to be talking about today. So, in addition to that, let's talk about why that tracking matters specifically. For one, it gives you clarity on your business performance. Now, if you're like me, you probably have an idea of what's going on, but what I've really learned, and I'm not just saying this as an accountant, what I've really learned is that in business, sometimes what we feel is not actually what's happening. So when we track numbers, it takes away the emotional part of things, it takes away the feeling, and it really gives us that data. And that data is what we can then make decisions on. And it's clear. It's not based off of a feeling or how we think we're doing or how we feel like we're doing, because sometimes we can be doing a lot better than where we actually are. I actually had a client like this where we started digging into her numbers. And as we were starting to figure out what part of her revenue went to each of her services, she realized that the service she thought she was really making money on actually wasn't what she was making money on. And I think the reason why she thought she was making more money on that service was because of the time she was spending in that particular service. And that can get down into profitability and efficiency. We're not doing that. Right. We're not going to talk about that right now. But what I want to stress is how she felt like something was better than the other services, but in reality, it was actually something else. And so what she was then able to do was to make the decisions if she wanted to charge more for that particular service. She had, the option to do that. She had the option to drop it. She had the option to start putting more of her marketing efforts into the service that was actually better performing. She was given clarity to figure out how her business was actually performing, how her services were actually performing, and then she could make moves based off of that information. It also helps you identify the strengths and weaknesses, kind of in that same sense. Once you can see the numbers, you can determine what is working, what is not working, and make adjustments according to that as well, which is why this data is so important for you. And then it can help support those informed decision making. A lot of times, as business owners, when we're first starting out, we're just trying to wing it, right? We often wing it. I know I winged it for a long time, actually. It wasn't until about year four or five even, that I really started getting super serious and super intentional about what was happening in my business, what I was going to do next, and what were the pieces in order to get there. And I was able to make those decisions being more informed about what was actually happening. So tracking those numbers gives you that information so that you can make those decisions from a more informed standpoint versus just winging it based off of factors or what comes up. It really helps put you more in the driver's seats. Another thing that it helps is to ensure long-term sustainability and profitability. When you are paying attention to your numbers, especially the ones that we're going to go over today, it really is going to help you be more strategic about the now, but also more strategic in the long term. And it's going to prioritize profit. And we're going to talk about profit and profit margins. But it's really, really important that your business is profitable, because if it's not, eventually you're going to go out of business. So tracking these numbers, making sure you're looking at it, it really matters to your long-term sustainability and profitability. And then another thing it will do is help you to allows you to spot the financial red flags earlier than if you just wait. So a lot of people get stuck in this pattern, and I understand it totally, because taxes and bookkeeping and numbers are things that are hard to understand until you really get into it a little bit more, and make it consistent. So what happens is a lot of people will avoid it. They'll put it off. They won't address it, and then they get to tax season, or they want to buy a house, or they want to expand their business and get a loan or something like that. And then they'll figure out that they've had some financial red flags. And they might know a little bit, but on paper, it's really in your face more so. So a lot of times people wait until a pain point comes up or an issue comes up before they start addressing these things. If you track your numbers, you'll be able to spot those red flags before they become big issues. So if you're wanting to be a proactive business owner, tracking your metrics and keeping KPIs is really going to be very beneficial for you in the long run. Okay, so now let's talk about what those 5 numbers actually are. The first one is revenue. Yep, believe it or not, that is a KPI. So revenue is how much money is coming into your business. Profit margin is the second number we want to track. What percentage of your revenue turns into profit? And profit is basically what you get to keep afterwards, or profit is the thing that you use to pay yourself, save for taxes, maybe expand, do additional projects, in-house personal projects and external projects, right? Profit is what keeps it all going. Profit is what pays back debt. So it's really, really important that you have profit in your business. And then third is cash flow. Do you have enough cash to cover your expenses? Enough coming in and out of your business to cover what's going out? You want to have more coming in than what's coming out. And that includes everything, your cash flow in general, revenue and expenses, but also loans and loan payments and taxes and paying yourself. All of that affects cash flow. It's all of the money. Then we have the fourth one is customer acquisition cost. So this is how much it costs to get a new customer. And whether you're a product-based business or a service-based business, this number matters because it tells you different things, right? So how much it requires to get new customers is our fourth number. And then our fifth number is the lifetime value of a customer. So how much revenue does one customer generate over time? And we're going to break these down a little bit further. Let me just double check because I'm manning this thing on my own. I want to make sure I'm not missing anybody showing up in the group because I accidentally did that last time. Okay, so I think we're good. Thank you for giving me a moment to check. Eventually I'll have somebody come in as a wingman or wingwoman. Okay, so let's break down now each of these 5 numbers. So revenue is your business's financial engine. If you do not have revenue coming into your business, you do not have a business. So you want to make sure that you have that. Revenue is the total income generated before expenses. It's basically the sales of products or services. And if you happen to have a nonprofit, you also have revenue. Sometimes it's called different things like contributions or grants, but all of that together is still revenue. It's just instead of you selling products or services, you're selling a mission. But your business needs to still operate the same, or organization needs to operate the same type of way from an operational standpoint as a for-profit business. So this is applicable to you as well. Why it matters. So why does your revenue matter? Like I said, it's if you don't have it, you're not in business. But tracking it matters because it helps us to see growth and sales trends. So this is really easy metric to track. If you are using bookkeeping, you will have your revenue numbers in your profit and loss reports. So one thing you want to look for is revenue dips or plateaus. So dips is like going down, plateaus is like when it's staying the same. Those things can signal deeper business issues. So if you're tracking it, you're able to see that. You can identify those red flags ahead of time, which is why this is a really basic number. Like if you're not going to do anything else today, start tracking and looking at your revenue. Look at it on a month-to-month basis, on a quarterly basis. Take a look at how that's changing throughout the year. It will help you to identify a lot of different things. Okay, so second number is our profit margin, which is the true measure of success. So, as I mentioned, I am a certified Profit First professional. What I really love about Profit First, which is a cash flow methodology and system, money management system for your business, what I really love about it is that it prioritizes profit. And like I said, a lot of times people think, oh, profit is my income minus expenses. That's true. That's your net profit or your margin, right? What it actually is when you have real true profit in your business. It's when you have that money left over, but that money is able to pay for your taxes. It's able to help you pay yourself what you should be paying yourself. It covers your debt payments and it helps you. It's available for you to strategically reinvest into your business. So if you're struggling with having nothing left over, your profit is probably not truly where it needs to be. And a lot of times you can pinpoint this as being a pain point if you've ever felt like you had a pretty good year, but at the end of the year, your profit and loss says you made a lot of money and you feel like you have nothing to show for it. So if you're feeling like that, that's a lot of times because our true profit isn't where it's supposed to be. And if you want to learn more about that or talk more about that, please let me know. But profit margin is the true measure of success, because if you don't have it, nothing else will work out. So your profit margin is your net profit divided by your revenue. It's what's left over after you take out all of the expenses and overhead and everything else. It matters because it tells you how efficiently your business is making money, which is important, right? We want our businesses to make money. What to watch for. So when you start tracking this metric, the thing you want to watch for is high revenue, but low profit margins. This indicates that you have high expenses or a pricing issue, or sometimes even an operational issue or business model issue. So you want to look out for those things. Those can be red flags that you can identify, but if you're tracking your margins consistently, you will be able to spot some of those problem areas ahead of time before they become major issues. All right, so metric number three, or number three, is cash flow, which is the lifeline of your business. See, because the thing is that you can have profit on paper, especially if you do any kind of invoicing. So if you do invoicing where you're not getting paid for services until later, sometimes there can be a cash flow and profit issue. On paper, it looks like you made money, but in actuality, you haven't received all of those payments for those invoices. So that cash hasn't actually hit your bank. Same thing on the other side. If you have vendors that you pay later, sometimes that can happen as well, where on paper it looks like you're profitable, you're doing well, but you still got to owe that money, to people. So it can become that catch-22 thing. The other thing that can affect cash flow a lot of times is debt. So if you had money that, you borrowed, but now you got this big payment, that can mess up your cash flow because you got to pay those payments. We see this happen a lot where it becomes a really big cash flow issue with those loans where they take money out monthly or weekly. I call them basically like business payday loan companies. Stay away from them as much as you can because those will kill your cash flow. And ultimately, it can really hurt and affect your business. We've seen too many people from a distance get put out of business as a result of those. So that was a super big tangent. So cash flow, what it is, it's money coming in versus money going out. So you can have positive cash flow and you can have negative cash flow. Positive cash flow is when you have more money coming in than is going out, and negative cash flow is when you have more money going out than is coming in. So having an understanding of your cash flow, how that looks month over month, can really be helpful for you to see if there's any kind of issues coming up. So it matters because tracking this will help make sure that your business has enough cash available to cover your expenses and your investment and your debt. So keeping an eye on that is important. Some things that you want to watch for is that negative cash flow trends could indicate poor financial planning, low profitability, or a lack of a good business model. So same thing with profit margin. Profit margin and cash flow are two very important metrics that really go together. You want to make sure that you have both. And side plug, Profit First helps you to do both of those things at the same time. So it's an awesome system. If you want more information, if you want a free copy of the book to get you identify it or give you that introduction to it, let me know. Okay, so fourth number is customer acquisition cost. What it costs to get a customer? And now you might be thinking, why is this an important thing to know? And I will get into that in a second. What it is first is your total marketing and sales cost divided by the number of new customers acquired within a certain time frame. So if we looked at the last 6 months of your business and looked at what you spent on marketing and sales, and then divided that by the number of new customers that you got in that amount of time, that is going to be your customer acquisition cost. Now, there are a lot of factors to it, but the point is that we want to start tracking this metric because over time, it will become more and more accurate as well. So, and the reason why this is important is because it helps you assess the efficiency of your marketing efforts. It shows if you're getting a real ROI or return on investment over time. So let's say that you're using somebody for sales and marketing, or you've delegated pieces of that. This will help you to identify if you're really getting enough to pay for those costs, because we're going to look at, how much it costs to get a customer on average. So if it costs me $100 for every new customer that I get, but every new customer I get will sign a $600 per month contract, then $100 per customer is nothing, right? I'm getting a really high ROI. So that might mean I can increase my sales efforts, or I can put more money into marketing, because if I spend more, in theory, right, I will get more, return on that. So it can help you identify that. Or the opposite, if your cost per customer is really, really high, maybe that means that you need to reevaluate what you're doing for your marketing and sales. Are there expenses that you can cut? Are there different strategies you can utilize? Are you doing too much instead of niching down or being focused in one area? That can easily happen, right? We can get this shiny penny syndrome where we're looking this way and looking that way, and we got our irons and too many fires kind of a thing. So looking at this number can help you assess that. It's a data point and help you to make more informed decisions as a business owner. So the thing you want to look out for is that number. Is your customer acquisition cost too high compared to your customer revenue? And trust me, it is really easy to spend a lot of money in marketing and sales. We want to make sure that we're getting an ROI out of those initiatives. All right. Customer lifetime value is the last metric, or the last 5 numbers. Maximizing customer value. So what this is your average revenue per customer times the customer retention period, and that is going to get you your customer lifetime value. And this matters because it shows how much value each customer brings over time. And the reason why this metric is really important as well is because it costs less to retain a customer versus getting a new one. So understanding what value a customer can bring can also help you identify which initiatives or strategies you want to implement on the sales and marketing side, kind of going back to the customer acquisition costs. These two kind of go hand in hand. If you figure out that one, you can figure out this one, and then you can figure out what is going to be worth your efforts, what is going to be worth your resources in order to get a customer, because you know how much on average you're going to be able to collect from that customer over their lifetime value. So the things you want to watch for is low lifetime value compared to customer acquisition costs. This means you are spending too much to acquire customers who don't stay long enough. So those two numbers really go hand in hand. They're both important for their own reasons, but put together can be a really powerful number for you as a business owner when it comes to your marketing and sales efforts. All right, so let's talk. Oh yeah, so before we wrap up, I wanted to show you some dashboard examples. So like I mentioned, if you are wearing lots of hats or you're delegating pieces of this, having these numbers set up can really help put you in the driver's seat, have still a grip on what's happening without you having to be in all of the nuts and bolts. And you can do that by setting up a dashboard of types. So this is an example, a few examples of dashboards that I have. As you can see, it has like the revenue growth, the customer acquisition cost, and you can set these up in Excel. There's also different softwares that you can use. We provide some of this data as well to our customers when we do bookkeeping for them. Employee productivity, revenue growth. We all like graphs, right, and pictures. This one has your gross profit margin, your expense ratio, the ROI, return on investment, and then process optimization. You definitely don't need to have all of these, but I wanted to just kind of show you a few different types of dashboards that you can have if you're working towards that in your business. The on-time delivery rates, inventory turnovers, all these great things. Goals and targets is another good one to like set up. Maybe not necessarily in this, but if you haven't already set goals and review those consistently and say where you are in terms of that, I would definitely encourage you to do that as well. It's really important to track your goals, measure your goals, and analyze your goals. Okay, so next steps. First, I want you to start tracking these 5 numbers. And even if you don't do the 5 numbers, do at least one number. If you comment on the video or if you've shown up live, you will get our bonus, which is the profit margin calculator. I put it in there that you can do profit margins as a company as a whole over a period of time, as well as the profit margin calculator for each product or service. So both of those are really important to do, but you'll have that calculator. You can add to that spreadsheet as well to track these other numbers, but start tracking at least one number. And if you haven't put your bookkeeping in place, that is going to be your very first step. Like, you can't create dashboards, you can't create measurements without having the data first. Bookkeeping is how you gather and collect and quantify that data. Okay, the next thing I want you to do is then review those financial reports regularly so you can see the trends. You can monitor the trends. You can start to understand how your business moves, how the numbers move, and you'll be able to get a better grip on how your business is operating. Then I want you to use these insights to make smarter decisions and improve profitability. And then finally, get financial guidance if needed to help ensure accuracy and efficiency and to support you. If that is something that you are interested in, I wanted to just quickly go through what we provide at Sidekick Accounting. So we provide bookkeeping services, everything from basic back-end bookkeeping to more of a higher analysis, more KPIs, more advisory role. We also do tax preparation and tax planning. So if you're tired of paying taxes, high amount of taxes, you're not prepared for taxes, taxes blindside you, please talk to me about that. We also do profit first implementation and business coaching. So if you're feeling like that business owner that always like sees their financials but never feels like they have enough money in it, if you're wanting to grow in your profitability and cash flow, talk to me about what we can potentially help you with on that end. And then I also have a support and educational community. We have a Profit First DIY course as well as a lot of other courses. So if you're interested in learning more about that, please let me know also. Either way, I'm super excited to have you here. I'm so glad that I get to serve you in this capacity. Hopefully this class was helpful. If it was, if you took a nugget away, let me know your action step. Let me know what was valuable. And if you need to get in contact with me or schedule a call, my contact information is here as well. All right, so that was it. Top 5 numbers every business owner should know. They're really important, you guys, if you want to grow and you want to scale and you want to be successful and sustainable, even if you don't want to grow in terms of like more employees or more revenue, even if you want to make sure your business is sustainable, these numbers are still very, very important. So definitely make sure you're looking at them. And if you have any questions, please let me know. Otherwise, I will see you next time. Bye.